Hi, I'm here today with Brad East from Wisebuy Investment Group. Thanks for joining me, Brad.
Thanks, Mike.
And Brad is a broker and has just been named the Advisor's Rising Star.
So awards last Thursday, actually.
There you go.
Yeah,
Still hungover, or?
That's passed. It did take half a week though, but yeah, that's passed. But yeah, it was very unexpected. So basically, what that means is Rising Star is less than 5 years' experience, and it was recognition of my contribution to my clients and the industry as a whole.
Beautiful.
Was, very unexpected, but yeah, that was good.
Well done. Well,
thank you.
We want to dive into the meat today and ask you about what's happened to brokers with the Banking Royal Commission Hayne recommendations. So obviously there were 76 recommendations that came out of the Banking Royal Commission. Interestingly, bank stocks went up, mortgage broking stocks went down.
Yeah, so it was, I think the very next day after the Royal Commission, the big four banks stocks went up 20 billion between the four overnight. So I think that's a bit of an indication of how the Royal Commission went. And it did kind of, on the next day, favour the banks quite a lot.
It's terrifying, to be honest.
It's I guess it shows you that it didn't really scare off any investors.
Yep.
They weren't getting hit with a big stick like we all thought they were going to.
Yep. And so with brokers, I know that there's an upfront commission that you guys get paid, and then there's a trail commission. So the recommendation was that trails would disappear.
Yes.
There were some changes proposed, I think, by Labor with the upfront. Labor and Liberal pre the Royal Commission findings said that we're basically going to do everything it says.
Yes.
And then have both thankfully changed their minds, because brokers are pretty important.
So there was this wasn't the first report to ever look into how brokers are paid. Just recently there was the Productivity Commission. There was an 18-month, around 18 months, ASIC review. So there was a lot of big reviews into the mortgage broker industry and how we get paid. Most of those reviews actually recommended that it stays how it is. Because we're creating competition in the industry, we're giving more options to consumers, and it was kind of a little bit out of the blue, if you want to say that, with the Royal Commission to then turn around and say brokers shouldn't get commissions at all. The consumer should pay, and brokers just don't get commissions.
I didn't even necessarily realise that brokers were in the firing line. Like, it was all about,
no one did. The
banks are dodgy, we're charging people for life insurance policies and they're already dead.
Some banks had well over 15,000 sort of crosses against their name, and that wasn't the focus of the Royal Commission outcomes. It was all about brokers.
Right at the death. Brokers are dodgy. Let's ruin them.
Throw someone under the bus at the end, but it was a big surprise. As I said to you earlier, I actually signed a 4-year lease for a new office that day, and it was quite a long day for me, and 27,000 other brokers in the industry. So it was a stressful day, and we didn't, as I said, we didn't expect that. We didn't expect that a recommendation would be that a consumer pays, because people wouldn't do it. I would see us being used as more of a comparison service there. You go sit down with the broker, you wouldn't want to pay. There's no way in hell you'll pay $2,500–3,000 when you could go directly to a branch.
That little meerkat bloke, he doesn't ask for money, does he?
Correct. Exactly. That's the way. It's just the way it works. So, at the moment, just to explain how it all works commission-wise, at the moment we get what's called an upfront commission and a trail commission. Now, that's based on the current loan amount. So let's say it's a $500,000 loan. We'll get a percentage upfront, and then the balance of the loan, we get a percentage paid out monthly. So the upfront, on average, sits at around 0.6% of the loan amount. That's paid upfront, and it's paid directly from the bank. So it's not added onto the loan amount. It doesn't increase the cost to the consumer at all.
And if they go to the bank, they're not going to necessarily get something cheaper.
No, 100% not. It's actually what's called channel conflict, so they're not allowed to actually do that because it's anti-competitive.
Right.
So brokers are able to access those the same rates that you could get at a branch. Sometimes even better.
Well, it's
discounts.
a lot of volume, right? Because
Correct.
as far as I understand, about 60% of mortgages are originated through
60% at the moment,
brokers.
yes.
Yeah, right.
And it's it's not only opened up access to some of these smaller tier lenders, like you've got, I wouldn't call them small, but you've got the fifth major at the moment is actually ING.
Right.
Now, how often do you see an ING branch? The answer is no, there isn't.
Yeah.
So that you've got access to ING, and they're, as a lender, their approval ratings are through the roof. They're getting awards. They're absolutely killing it. Without brokers, you won't have access to those sort of lenders.
Yeah.
It would all go back to the big four.
Yeah.
So for me personally, I can see why there was motive from some of the major banks to try and push brokers out of the industry.
Yeah.
As a business, why wouldn't you?
Yeah, exactly.
Why would you want competition there?
Force people to come direct to
Correct.
you, then you're in their ecosystem and they're like,
Correct.
have
And
you
then
talked to Barry about life insurance?
Exactly. So you've got more opportunity for cross-sale as a bank if someone comes into your branch.
Yeah.
So for us, most brokers, if someone, we not only do we research over 40 lenders, we select them. We select a bank that's based on their current situation. So it's not always just about interest rate. They might be self-employed. They might have only been employed for 3 months, or they've just swapped jobs. There's a lot that goes into it. It's not just about finding a bank and here you go. Like I heard someone refer to it as a spotter's fee. A commission is a spotter's fee.
Right.
If anyone thinks that, I'd invite them into my office to actually show you
especially now with the new
that
serviceability and that sort of thing.
There is 10 plus hours more just to get it to that bank.
Yep.
Because we're actually doing the assessment legally. We have to assess the client's position before we send it through.
Yep.
It's not just a matter of going, here's a cheap rate, there you go, let's match them up. There's a lot more to it. So there is I think in my opinion, obviously I'm a broker, so it might be a bit biased, but there is a justification for the bank actually paying a commission and not the consumer.
Yep, and the trail part of it. So why are they picking on the trail and saying that part of it is?
As far as, don't quote me on this, but as far as I was aware, trail was introduced a long time ago. I don't know, maybe 10, 15 years ago, before my time in the industry. It was actually introduced to create a little bit more ownership on the broker to service that loan over the life of it. So that might be a product switch or anything like that. I've actually got a good example of how I help the client at the moment. They're with a unnamed second tier. Yep. They wanted to change from paper statements to electronic. Yep. Now that client is quite busy, couldn't do it. Couldn't do it electronically online, which you think you would. Yeah. And he called the branch. The branch said you have to come in. He actually got it through to me, and I got it done. I just sorted that out. So that's the sort of thing that we were told. That's why we get trail for. And
you assess the loan, 10 years down the track. Correct. There's new products on the market.
And we get a lot of the lenders. I think a lot of the motive behind them actually paying us was so that we don't do what's called churn. So we don't churn a deal out. So if we didn't get a trail, they would think that it's here for 2 years. Let's move it over here because we get paid again, or we get paid again. Yeah. So for them, there's
a great new deal that's popped up, and interestingly, it's the anniversary of the last one. But that's just a coincidence.
So I think by removing the trail, it could open up opportunities for brokers to do that. So
cause maybe more dodginess than it solves, right?
Personally, I agree with the idea of having a trail. There's a lot of free work that I do for my clients. Mm-hmm. Today, or over the last couple of weeks, sorting out e-statements, and there's so many inquiries we get from our current book. Mm-hmm. Now, if we were to remove that sort of consistent income that we get every month, we would be forced to move into a bit more sales. We need more people in the door, and I think that's how my business would shift. And you have to adapt to that. So my shift would go. I personally think the service would drop off a lot. I probably shouldn't say a lot, but it would drop off. If the banks are saying we're not going to pay you to maintain that loan, then that's how it would be. I'd literally say, all right, then from this point on, you service the client. I personally, I don't think that's a good idea. I think look at the guy that was just trying to go to e-statements and was unable to do that. It's an easy thing, and it was unable to be managed by a bank. I personally think we should be as brokers, we should be increasing our services to clients, not winding it back. 60% of consumers come through a broker now.
And I think the marketplace agreed. I mean, you can say a lot for the mortgage broking industry getting their act together and lobbying against potential changes, and that voice has been well heard by both sides of the government.
Big round of applause, I guess, to the MFAA and FBAA, our industry bodies. It was honestly surprising to see how much the TV, there's signs on buses, it's in the newspaper, it's everywhere, and the public did react really well to that.
Yep.
And you just look at the, if you want to call it, backflips that the government's doing as well. So we've gone from the day that I signed the lease, Royal Commission come out, doom and gloom for me. I thought, what a great day.
I'm washing dishes at the local.
Well, I might convert my new office into a cafe. So don't laugh, that was a thought. It's in a good spot. So 5 weeks later, we have Liberal that's come out last night, I believe, saying that they want to leave Trail Commission as it is and leave the upfronts as it is, because they've done further research over that 5 weeks and they've discovered that the system isn't broken. Why are we trying to fix it? We've, I think they did a study recently, and it was in the high 90s, like high 90% of percentile of customers of brokers are happy with their broker.
Wow.
You put that into perspective of a bank. You know that over a 12-month period, there was a review done, I believe, by one of the publications, maybe the Advisor or something like that, and let's say there was 500,000 complaints in a 12-month period. Less than 0.1% of those were through broker originated loans. So don't quote me on that. But it was a very, very small amount.
I think it's great news, and we really need to probably go back to the original focus of the Royal Commission.
Royal Commission was
look
meant
back
to be.
at the banks.
It was meant to be about cleaning up the banking industry. And I think a lot of this distracted from that. And then all of a sudden, the brokers were thrown under the bus a little bit, and I personally now, 5 weeks later, I don't think that's going to happen now. I think the public has seen that the value that we've added to the industry. Some of the smaller lenders, you know, that would be catastrophic for them if brokers were gone, so they've backed us as well. And you know, at the moment, I'm the busiest I've ever been. I've got back-to-back appointments, and it definitely didn't scare off any of my clients. You know, and you've got some of the publicity we've received as brokers from this has been really positive. Like, I think one of the press conferences was Scott Morrison, the Prime Minister, publicly backing the mortgage brokers. If that's not good publicity, I don't know what is.
Exactly. And I think it's really good news for the